record. All right, we are recording.
All right, perfect. So this is the session on the Fibonacci's retracement. It's a very valuable tool that we use for trading, like myself and Danny. And yeah, we utilize this tool on a daily basis to help us identify key levels where people in the markets will be interested in getting in or out. And so, yeah, why don't we take a look at how this tool is used? Danny, you have some charts there?
Yeah, let me.
You got, well, why don't we just explain what Fibonacci's is before we look at some charts?
Exactly. Let me try to. How do I share my screen? Here we go. Stop. Okay, can you guys see my screen?
Yeah. Cool. We can see all the all the unmentionables.
Yeah, exactly. Okay, so all right, so we're just going to focus on Fibonacci levels today. So I'm going to kind of go through those first two slides pretty quickly. And the reason why is we just wanted to make a brief introductory kind of video to show one of the primary tools that Chen and I use to trade, and that's Fibonacci levels. Right, so what is a Fibonacci level? Well, if any of you guys have heard of Fibonacci ratios or Fibonacci numbers, it's basically that. Okay, Fibonacci levels inherently are ratios of Fibonacci numbers. All right, between Fibonacci numbers, that is, and they represent steps that are significant in some way. And in this case, they form useful levels in trading. Now, a couple points here is that Fibonacci levels always occur when you have self-referential behavior. So if you guys are familiar with fractals, or they show up in biology and population samples, all sorts of stuff, right? You have this self-referential behavior where the thing at some point in the future is related to that thing in the past. So when you think about it, the asset price, whatever it is, a stock, a bond, a futures contract, a forex product, whatever it is, what the price will be at some point in time is going to have to be related to the price in the past, right? It's not going to vary so wildly that you just get numbers that don't make sense, right? So when you apply these numbers, when you apply this analysis, you start to see these patterns unfold and these levels that appear that the asset will obey in time. Now, the second thing is I just used the word level. So what is that? Well, a level is a particular price point that the asset likes to obey. And when I say obey, which it means if it's trading above that value, it can find support, right? So if the asset is losing value, if a stock's trading at $100 and say there's a level at 99 and the stock starts to trend down, we can reasonably infer that we might see a little bit of support at that level. And the same thing, if we have a level at $100 and it's at 99 and it's rallying, right? It's increasing in value. We anticipate that it might see some resistance there. So this is obviously very, very important in our trading to identify these levels and these opportunities because they may present themselves as ways we could either enter a trade, or if we're in a trade, we can either take profit or know when we might be encountering some troubles if the asset doesn't turn our way. Okay, so Fibonacci retracements in particular can identify these key levels. And the key point to remember here is that it only requires two significant points, which we call anchor points. And those anchor points are significant in some way. And what you have is basically a tool, any given platform or anything that you could trade off of or do charts is going to have a Fibonacci tool. It would just be garbage if it didn't have it, right? And all it does is it does all that math between the Fibonacci ratios and so forth for you and draws them on the screen, right? So you don't have to actually go through and calculate that. But again, it requires two significant points or anchor points. And once you've drawn those, again, it will go ahead and draw all those levels in between. So just to emphasize, that these levels are based on ratios between Fibonacci numbers. So for those of you who care, the Fibonacci numbers are generated by what's called a Fibonacci sequence. And that's basically every number is related to the past two numbers that came before it. So the first one, right, I have 1 and I have another 1. So we add those two, we get 2. Then I have 1. So we basically move on down the line. If you can see my cursor, 1 and 1 is 2. Then 3 is the sum of 1 and 2. 5 is the sum of 2 and 3, and so on. So when you take these ratios and you take the ratios between those numbers, you get the Fibonacci retracements, right? So here's an example where we've taken TXN, that's Texas Instruments, right?
That's correct, yep.
Yep, okay. So this is one that Chen drew. And basically, you see we've identified this high here as a significant point. Again, significant is kind of in air quotes because what is significant for one practitioner might be different for another, right? It is as much of an art as it is a science. Okay, so we've identified the high here. And we'll get into a little bit some ideas on how you can properly identify these anchor points as we proceed. But just for example here, we identified this high as the upper anchor point, and then the bottom anchor point is this relative low here. We didn't choose this one over here. We chose this one over here, and there's reasons for that choice. And you'll start to see that as we progress with the other examples. But you see here that we did a pretty good job with this example, because where the tool draws your Fibonacci levels, you should see some type of support and resistance. So here, the asset is having some troubles right around some consolidations as well, right around where the tool drew that. All right. So just a little bit more details on how to draw them. Again, you want to first start out with this Fibonacci tool, obviously, the thing that draws them, and you want to identify a significant upper bound. All right, I just touched on that in the previous slide. We're talking a little bit about what constitutes a significant upper bound. Again, it's a little bit more, this is where it becomes an art and a science at the same time. But some ideas is that you have the high of a candle or the head of a candle. Remember that the candle is called a candle, right? Because we have an open and a close, which form what we call the body. And then the high and the low is drawn as a line above that candle, and that's what we call a wick, right? So it could either be the high or the head of that candle. And then conversely, with the lower bound, right, or the bottom anchor, we could determine, we could find the low of a candle. That is where it wicks to the downside, or the tail of the candle. All right. So this one, okay, this is actually a little bit advanced. All right, here we go. So here's an example where we've identified the top here. And if you notice, I did not choose the wicks here, right? There's reasons for that, right? Typically, when you choose the wicks, you tend to include the volatility of the asset a little bit better. So that is, the wicks will match the Fibonacci levels. When you choose the heads, sometimes it can be a little bit better at identifying these consolidation patterns here. So what we see, right, if we chose this lower bound right here and the upper bound here, we see that we have some nice, a nice representation of the value as it trends here to the upside, right? And equivalently, you could test if you've done a good job with the Fibonacci tool as you look at whether the asset respects your levels or not. So here we see some pretty good adherence to the levels here, a very good representation here. And as we trend downward, see we are having some issues here. And then we tank further and see again some support right here. So this was a pretty good job. Again, it works for downtrends too. What we saw was a very massive spike in price, but this, we could see that this asset tanked probably off some data. I don't remember what the specific data point was, but as you see, we're pretty good at identifying these levels here. Finally, this one, this is another good example. What I like to do often when I teach is to show examples of these trades or this analysis in real time, because anybody could sit there and take a chart and work backwards, knowing the answer in reverse and telling you everything as if they're an expert, right? But it's a whole different story to use this in a forward sense, right? And this is one of the advantages of the Fibonacci tool, is that it's forward looking, right? A lot of indicators, a lot of technical indicators, they're not forward looking, right? They're basically averages of values that came in the past, whereas the Fibonacci's are very good at predicting forward, right? So whatever lines that are drawn, whatever levels are shown, I can expect to be respected in the future. Okay, so this was an example taken, a screenshot taken before, and then after we see some nice resistance provided by this level here and some nice support provided here. So it's basically telling you it's a confirmation that we did our levels correctly. Okay, now Fibonacci extensions is basically the same concept, except Fibonacci retracements are drawn between the levels, right? Between the anchors, right? Fibonacci extensions are drawn after those anchors. Okay, they're projections. So again, these identify Fibonacci levels past 100%, and they're used for anticipation of support and resistance or potential profit targets, right? And these require anchor points just like the Fibonacci retracements. It's basically the same kind of skill. It's just that the tool will draw values after that top anchor. Okay, so here's an example with Bitcoin. This was very, very good for predicting Bitcoin profit targets, right? So I've identified here, because I understood the product, I worked with it for a long time. So I understood that with Bitcoin, oftentimes the wick doesn't really matter so much. So again, this is one of those areas where experience comes into play, and it becomes an art and a science at the same time. So I've identified this upper bound here and this lower bound here, and sure enough, we have the Fibonacci extension at 1.6, right exactly where the asset faces some resistance here. Same thing, same idea with the Dow Jones. Okay, what we're looking at here, this massive rally, that was the Trump rally after President Trump was elected in the US. And what we see, similar idea, what I did here was I identified the top and the bottom of what we call this little range here. It's not quite a channel, but it's a encapsulation of behavior, right? So we have a lower bound and we have an upper bound. I chose to draw those Fibonacci's here, the anchor points as such. And the tool, again, just goes ahead and draws it for me. Okay, so we have the first Fibonacci extension right here. And as we see, the asset starts to have some troubles here. The Dow Jones kind of falters a little bit, ranges a little bit. That means it just kind of stays in place for a little while. And then, of course, it breaks out. And then guess what? Again, we have some issues over toward the second one. All right. Again, this is just another example with the euro against Great Britain's pound. All right. So this was a data point. I don't remember off the top of my head which one it was, but basically, again, if you use that behavior to anchor your Fibonacci's, then if the asset is rallying, with force, with some momentum to it, we can still expect it to anticipate some resistance at these extension levels. Okay, same thing with the euro against the Japanese yen. Again, this little oscillatory period here, I've identified the high and the low as the anchors for my Fibonacci. And again, we see with the extension where it's going to have some troubles. I'm not really going to get to Fibonacci levels in time, but just suffice it to say that the Fibonacci concept can be applied to values in the time sense as well as in the price sense. Okay, and this basically, instead of using the prices as I did, we would use dates or times for the anchors, and these can forecast turning points and some volatility, but I won't go into those levels. I think for now, If Chen, did you want to add anything? Because we're going to start looking at some charts here in a second.
Yeah. I actually have a great example from today on the E-mini S&P 500 futures contract that shows a very good example of how to use Fibonacci's on an intraday basis. So,
okay, awesome. How do I share my screen to you?
I believe you should have the functionality to pass over screen sharing to me.
Hold on, let's see.
Okay, perfect. Yeah, so this is a great example of how you can use Fibonacci retracements, Fibonacci levels on an intraday basis. So, Danny had some great examples earlier about how to use Fibonacci's from a daily time frame. Sorry. This here is a great example utilizing an intraday time frame, and what we're basically looking at is the E-mini S&P 500 futures contract here with um, with our previous high being yesterday's high price over here. That sets our anchor for our top point, and the daily low set by today, which becomes the low point for our anchor to the bottom side. And when we extend this Fibonacci between these 2 points, we get some very interesting levels here that showcases us very good examples of how we can utilize Fibonacci. Specifically, I want to focus in on this area here of the market for today. Oops. So let me try that again. We'll focus in on this key area here of the market. Now, why this area is pretty key is because today we had a series of news events that came out. If we go over here to Forex Live, we can see that during the afternoon, there was a big headline being dropped out of Dow Jones stating that the US-China trade talks have basically derailed simply because they weren't able to put an actual figure on the amount of soybeans being purchased. Now, when that headline came out, it created a negative sentiment for the market, and that caused the S&P 500 to sell off pretty fast. So the market did drop down dramatically. As we can see here, it dropped down to this area right here, right at a Fibonacci level where it bounced back. Now, this tends to be very, very common when it comes to trading markets like this in an environment where news headlines are moving markets. You can utilize your Fibonacci levels to figure out key areas where the market is going to find interest. So in this specific case, you had a headline that came out while the market was relatively at the highs of the day, and that headline caused the markets to pull back because of the negative sentiment on that headline. It obviously pulled back right to a key Fibonacci level before it bounced back up and found some buyers. Now, this here is a great example of a trade setup where you have optimal risk reward potential around this key area here, where you can keep your stop loss relatively tight and utilize one of these key Fibonacci points or Fibonacci levels as your profit target, whether it be to here or even higher up to here. That creates very good risk reward potential. In this case, 7.5 to 1 or a little bit less depending upon which extension you're using. So all in all, this becomes like a very good way of utilizing Fibonacci's once you understand how to set them properly. Obviously, the key thing here is setting the anchor points from the top and the bottom. You have to understand where the key level is for the top and bottom anchor points. And then secondly, you have to understand how news drives the markets in the current context of the environment. In this case, the piece of news was very pessimistic, causing the market to do a short-term pullback, but then that pullback was met by a lot of buyers. And when you see momentum beginning to wane as the price pulls back, that's probably a good opportunity to get long. In this case, we're in a very strong bull market environment. If we zoom out on the S&P 500, so we can see there, it's a very strong bull sentiment going back. Taking the bullish side of the market, you can set yourself up for getting in somewhere around one of these key Fibonacci levels and getting a great trade. So examples like this happen all the time, and it comes to several key skills that you need to understand and learn how to use properly. Anchoring Fibonacci's, understanding Fibonacci's, understanding news-driven events, and understanding proper risk-reward potential. Again, this is one of those great examples that took place today. Any other examples you can think of, Danny, that took place today?
Not today, but I did want to go over the some of the examples with the Ghostsquawk. Maybe if you had some in mind, since you're sharing your screen already, we could go over that, because I did want to focus on, there's basically two important factors in trading, right? Where you think the market is going to go and where you want to enter, right? So we just covered a really great example of a really awesome tool. There are many, many others, and we cover them in our course. But a really, really awesome tool that can allow you to identify these key places to enter. But how do you know where the market is going to go? Or how do you get a feel for where the asset is going to, is it going to go up or down, right? So we actually are working very, very hard to put together a tool for you guys that does exactly that, right? It's basically a news aggregation tool. So one of the big major important points as a trader that you want to have is a news service, right? So a lot of those they range in price from $150 to 3,000 or so a month. That's Bloomberg, right? Chance like 3,000 a month. And
Yeah,
and obviously they have bells and whistles and all kinds of cool stuff, but we've basically put together something for you that shows you exactly what you need to trade. And it's going to be released very, very soon, within the week. So this is a tool that we use not only to get caught up on the market events and to catch them when they happen in real time, but to also get a feel for where the market is going. So did you want to take it from here?
Yeah, so right here on the what you see on your screen is the website right now. Currently, it's still a work in progress, and it'll probably always be a work in progress. But what we have so far is a functional website that not only provides you with market moving headlines, as we can see all around here, all around this general area of the market, or sorry, of the screen. You can also see on the right hand side the source of the data or the headlines that comes out. Also, a couple of key areas to note is up here where you have your risk on, risk off sentiment. Now, risk on and risk off sentiment is a proprietary tool that we have developed to essentially read market headlines and determine, based upon the most relevant headlines, whether or not the market is trading in a risk on, risk off environment. Now, risk on, risk off environment is what institutional traders use to determine the sentiment in the markets and use that as a way of positioning themselves on whether they want to be long or short the stock market, long or short the forex market, long or short the bond market, long or short the commodities market, because all of these key markets have connections and correlations with one another. Going long one market is a strategy, and you can use the inverse to go short in another market based upon risk on, risk off. So, for example, if you're going long the stock market, which is a risk on environment, you'd probably want to be short commodities like gold or bonds, forex, fixed income products like bonds. Now, in the inverse, you'll probably want to be short the stock market and long products like gold or bonds. This tool here, being a risk on, risk off indicator, gives you an idea based upon the algorithm and the machine learning that it takes in from market moving headlines, whether or not you want to be positioned for a risk on, risk off environment. So that becomes a very, very powerful tool that is developed. In addition to that, we also developed this Squawk, in which you can get for free. Here, that also squawks market moving headlines. You can hear in the background. In addition to that, we're also going to be aggregating a lot of our educational content onto the website, so you can access all the educational material, including the Fibonacci lessons, as well as other lessons, all through the Ghostsquawk website. So anything else you want to add? Anything else that I missed there, Danny?
No, basically, just one thing I wanted to really hammer on the risk on, risk off sentiment tools is that, my background primarily, my training and was in math and physics, and I went through a variety of different career choices, but I have a very strong specialty in machine learning. And so additionally, I'm a trader, right? So we basically work together to aggregate thousands and thousands of training samples to show you, to train this machine learning tool how to ascertain when something is, when the markets are in, or sorry, whether a headline is risk on, risk off, or neutral. Okay, so what you're looking at up in that top left hand, top left hand corner, is the is just that, right? So basically, every a single headline is not necessarily worth as much as what they tell you in aggregate. So what is the news today like? Okay, what do I mean by that question, right? So if I read the set of all headlines, right, I'm going to see, stuff like Chen discussed earlier, right? But I also may see some good stuff, right? I may see some earnings reports, okay? I may see some Trump tweets. I may see some news about commodities like oil. I may see some developments in the Middle East. And it's very difficult for you as a beginner to just key in right away and be like, oh, that's good for bonds, for example. Or, oh, I want to go long stocks on that news. Okay, so what we do for you is to kind of aggregate or get a feel or get a measurement for those, the set of all headlines that have come through recently. We take the most recent 50 and we tell you how many of them are risk on, how many of them are risk off, and how many of them are neutral. So if you look right now, it's pretty much 50-50, right? So what we could gain from that is that, we have 14 risk on, 14 risk off, and 21 neutral. It's basically about as flat as you can get. So let's see what the stock market's doing right now.
Yeah, so just to reiterate what Danny is saying here, if we take a look at the market right now, we can see that the market is relatively stable. Whether it is, well, it's not going up, it's not going down, it's relatively going sideways, which is very indicative of a neutral state in the market. And that can be confirmed by looking at the general direction of markets such as like gold over here. We also have the dollar yen down over here. Up on the top right, we have the bond market. So in addition to that, you see the bond market again relatively stable, generally
it's
going sideways.
also important to notice that measurement is done in real time, right? So if you see some of those assets that Chen is showing right now, they have rallied, or in the case of the U.S. dollar, they've collapsed a little bit. However, we have to understand that the Ghostsquawk is telling you what's going on right now. Okay, so if we maybe switch the time frame to like 5 minute or 3 minute, you're gonna get a better feel for what the Ghostsquawk is saying, because see, now it's a lot more apparent that the markets are moving sideways, because if you look at the very tail end of each and every one of those charts, you can see that whatever the asset is, it's leveling out, and that's exactly what the Ghostsquawk is telling you right now.
Yeah, so it's a very good indication of risk on, risk off in a real time environment, and very powerful tool to help you trade pretty much any market. And that's a great thing about this tool that that Danny has developed, is that whether you're a forex trader, stock trader, commodities trader, or a fixed income trader, this is a very relevant tool that you can use and apply to any market that you want to trade.
Yeah, exactly. And so again, I think no matter what what specific product you like to trade, I think that we have something, we have a tool that could benefit you in that, in your discipline, in your field of study. So check it out. See what you think of the tool. Right now, it's currently free to use and to log in. We're making some improvements, and we're going to start charging, but only $9.99 a month. We put a lot of effort into this, and I think that it's worth a lot more than that. But we want to basically provide the common people's, the power to the people kind of thing, So I think that what we have provided for you is worth a lot more than that. But again, we want to give everybody equal accessibility to trading. So go ahead and check it out.
Yeah, so just a wrap up on things here in conclusion. This is a tool that we're developing and expanding upon. As of now, you have access to the squawk, to the risk on, risk off indicator, and the real time headlines. In the very near future, you're also going to have an aggregation of our online content via videos and all the modules and additional resources for educational tools to help you learn how to trade the markets properly. And those will all be included in the same subscription service. So an extremely fair value for a powerful tool to help assist you in trading the markets.
Additionally, one more thing that I want to add into that is that I also have other proprietary indicators under my TradingView handle called Quant Guy. That's also my Instagram and my Twitter and all that. And those will be available to you as well. I have some YouTube videos that I'll post in the description that tell you how to use those products, and you get this all as a package, right? So basically you're getting the risk on, risk off, you're getting the news. You will be in the very near future getting access to our recorded classes, and you get technical indicators, other technical indicators, which I also teach you how to use personally, all for $9.99 a month.
That's amazing, amazing deal. So yeah, I guess we could leave it at that for now.
Yeah, pretty much.
And
I think that covers it.
yeah, and then we'll leave the links to reach out to us, our email, and our social media tags at the end of the video for any of those who are interested in signing up. You can sign up by going to Ghostsquawk and just filling out the forms to get yourself situated with all of the content.
All right, well, thanks for tuning in. We'll be putting out a couple more of these videos, actually much more frequently. We'll be doing little snippets on a particular topic. We'll be doing market commentary, and we'll be much more active, not only on social media, on YouTube and all that, but with our live courses. So just stay tuned. If you haven't already, join us on Discord, and try to sign up for the Ghostsquawk.
Perfect. Have a great one, everybody.
All
we'll
right.
catch you guys next time with another valuable lesson on how to trade certain aspects of the markets.
Thanks for tuning in, guys. Good night.